Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Checking in on oil, this is the hourly time frame, so not a huge reaction to the inventory report today, and although we did get a bullish break of this descending triangle pattern, we are right back in it, and this is why I like to use trend lines as a heads up, but overall it's price action that is king in my opinion. And we would have had to have broken 53.69 to break the lower high pattern. And here we are back in a consolidating range. And we're going to see a break by the end of this week, either a break of 52.74 support or a break of this lower high pattern with our current most recent lower high at 53.49. So the bears are still in control unless we can see a break of this lower high pattern, and the daily time frame shows that with an upper wick showing profit taking the past 2 days and the inability to close strong. So after another rejection from $54, we are still pulling back and trying to find our higher low, which we are approaching an uptrend support line. If we lose 52.74, we'll be looking down at 52.20 as the next support level, and the bulls need to see that break of 54 as we know. On the weekly time frame, let's see how, with 2 trading days left to go, we're not seeing a lower wick this week. So if the pattern were going to remain intact over the past 5-6 weeks, we would see the bulls show up here at the end of this week, the next 2 days, to buy this dip again. So it's going to be very interesting to see how we break from this hourly pattern. That is what I would personally be going off of, with the lower highs and horizontal baseline of support very clear. And if we don't get a break tomorrow, we certainly should get a break by Friday, as we can't get a whole lot tighter from where we currently stand. So looking at USO on the daily time frame, upper wick rejecting from the 50-day moving average resistance. I'm looking at support of 1130 and resistance of 1149 in this really tight range that we've been in the past 3 days. If we break 1130, we're looking back down towards 1104, and if we break 1149, we're looking back at the 1160s. So we have a little bit of a couple levels to be watching before we watch our wider range of support and resistance. And the weekly time frame still has that middle Bollinger Band support, and it shows really an indecisive week here with not much volatility at all, a tiny little doji with a tiny little trading range over the first 3 days of this week. As long as that weekly middle Bollinger Band holds, it's currently 1118, the bulls will remain in control and fend off a bearish MACD cross, which will happen. We will see a bearish MACD cross if we lose that weekly middle Bollinger Band. So watching that oil hourly chart overnight, and we'll see if we get a clear break. There it is. And we are seeing a little bit of bearish momentum. So I personally would not be in either direction until I see a break of this pattern. I appreciate you watching. We'll check back in tomorrow after the close. See you then.